Good morning and welcome to Morning Markets. The week ahead brings a combination of economic data, company reporting and also some political events. So firstly, let's turn to Asia, not where we usually start on our outlook for the week, but a couple of events in Asia I do think merit attention, particularly as it relates to China this week. We have what's called the third plenum. This is a Politburo meeting where really medium-term economic and policy decisions are discussed and debated. And really there we can expect some detail maybe to come around how the party are thinking about technology investment, development plans, but also I think bringing together the challenges that the Chinese economy is facing today when we think about the problems in housing and also weak consumption. So that's something that we'll be looking out for. That dovetails nicely with the data that we've received from China this morning, which continues to highlight that ongoing challenge from a growth perspective. As we look at the GDP numbers, really two key drags on those numbers today. The first being retail activity, which is somewhat anemic, still growth of around 2% year on year. But really more influential in that is just this ongoing challenge that we have in the property sector and investment there, that falling 10% year on year. That all comes together to give us a GDP number for the second quarter of 4.7% year on year. Those of you that have been joining us for a long time in these morning markets will be aware of the 5% target that China has, and certainly we're just on target to achieve that and no more. If we look at the first and second quarter combined year to date, we are in and around that 5% level. PBOC also this morning, they left interest rates unchanged, which really is starting now to be challenged, I think, because of the weak data that we continue to receive, and some action, whether it's on a monetary policy or fiscal policy, needs to bring about some evident change. If we then turn to Europe, Eurozone this week, we have the ECB meeting. Certainly no change is expected to interest rates following their first move earlier in June. If we think about what we'll be focusing on, certainly more about the direction of travel and the communication, the messages that we can take from that as it relates to the direction of policy, particularly as we look to September. Is there a chance of another interest rate cut coming from Europe? If we look at the UK, very much about data points that will help the Bank of England on their decision-making journey as we look to a potential interest rate cut in August. That will be around retail activity, so of consumption, but I think probably more influential will be the employment data and wage data that we get this week as well. Wage data is going to be important because if we think about what has been the key challenge for UK inflation at this point, it's really that of services and that service-led inflation, which has certainly been stickier than most have expected. So some detail on that will be additive to the bank's decision-making process. Turning across the Atlantic then to the US, really will be a combination of economic data in terms of retail activity as well, but very much we probably will hear from quite a number of Fed speakers this week prior to them entering their usual blackout period. We're not expecting any significant change in the rhetoric, just given how it was discussed last week by Chair Powell. But there is a neat balance that has to be struck in the US, and that's certainly about keeping interest rates at a high enough level to quell the inflation backdrop that we've seen and the success that we've seen there, but also not reducing interest rates too quickly to stimulate that, but balancing that with the challenges that we've started to see in certain areas of the economy. So we'll be looking for some detail on that. And then clearly a very important aspect of this week will be the companies. Hearing from companies, their reports. What are they seeing in terms of demand trends currently? What are they thinking about for the future? How are they thinking about investment plans? How are they thinking about employment plans? Just given how tight the labour market has been in the US, but tentative signs of it releasing a little bit. I'll leave it there, but please do join the team through the rest of the week. And also just click on the subscribe button on YouTube to get this great content.